Well, you heard us talk about it. Our next guest has reportedly been added to the short list, President Trump's short list on Fed chair picks, former St. Louis Fed President James Bullard. He's now the dean of Purdue University Business School, a longtime friend of the show. And when I heard the news, Jim, I said, well, I don't know if he's a hawk or a dove. I just know he's really smart, and I've known you a long time, and I've been out to the St. Louis Fed with you and everything else. And I think he'd be a great pick. Do you know whether usually if there's smoke, there's fire. Has your life changed? Did someone call you? Is it fake news? Do you know if you're on the short list now? Have you been, Secretary Bessent, like, are you on you pick up the phone and it's him every time it rings?
I did talk to the Treasury Secretary last week, and he said he was going to be out of the country, but the Wall Street Journal broke the story up, I guess. I don't know where they got their info, but I did talk to him. We had a brief conversation, and I told him it didn't sound like they had a process locked down yet, but I told him I'd be happy to, proceed however they wanted to proceed.
In terms of, it would be more, I guess, vetting. Is that what's involved? You did more. What would you tell them? Do you think we should be cutting rates right now? Is that the answer you need to give?
I'll accept the job if we set it up for success. If we can protect the value of the dollar, be the reserve currency, that'll give us lower interest rates over time, if we aim for low and stable inflation, and if we can respect the independence of the institution under the Federal Reserve Act. I would say if you want to change the Federal Reserve Act, that's a matter for Congress. Congress has looked at it a lot. They like it the way it is, basically. So I think work within the institutional structure, do the things that we have to do to keep inflation low and stable, and keep the inflation risk premium out of interest rates. If we get an inflation risk premium in there, then we have to pay higher interest rates all the time than we otherwise would. So I think that's the basic case that I would make. And am I a hawk or a dove? I think what I've learned in this is don't be dogmatic because situations change. That's
what I was going to say. That the reason I don't know is because you've been both. I think, in the experiences that we've had with you. Most recently, though, and you correct me if I'm wrong, I thought you were warming up to the idea of a cut, and that maybe the risks weren't totally symmetrical in terms of the two mandates. Last time you were on, weren't you sort of amenable to at least talking about?
Yeah. I think the committee put their rate cut program on pause when the tariff situation arose 6 months ago. And now you have 6 months of evidence. I don't really think tariffs cause inflation. Taxes don't cause inflation. And so what you're seeing in the data is very muted effects that are one-time increases in the price level. And so you're not really seeing anything. And the committee's coming around to the view, I think, that this is probably a one-time increase in the price level and is not interrupting the longer-term trend toward 2% inflation. So they're ready to come down. I think they'll cut here in September, probably again later in the year. And as I said last time, I think you could continue that into next year. So you'd probably get 100 basis points by this time next year, and then you'd be close to the neutral policy rate. So that's a good place to be if unemployment's in the low 4% range and you get inflation coming back to 2%.
It's an unbelievable position, obviously, for anyone that if you're in that business, Jim. Prestigious, and I don't know I know the president might be more powerful, but I don't know after that where you go. So I can see how you'd want it. Seeing the way that the slings and arrows that Jay Powell has suffered at the hands of President Trump, whether it's deserved or not, is that worth it for you if a couple of years from now you see, dollar stability as the primary, risk, and you wanted to keep rates high? Are you ready to withstand that type of of criticism, and it just seems like I'd be thinking about whether I wanted to take that job.
Well, I think you have to, if you're going to accept, you have to say, well, I'll accept, but we have to set this up for success, not for failure. If you want somebody to come into the job and fail, get somebody else, I think. And I actually think anybody on this list would insist on that before they would take this job. So I think, but, am I willing to raise rates? I was one of the ringleaders in 2022, and we raised the policy rate 75 basis points. 4 meetings in a row.
Ringleaders are always bad. Ringleaders are perpetrating crimes. Usually, that was a good. That in hindsight, that was the right move to make, right? So
and no recession. No recession. You act quickly and aggressively, break the back of the inflation psychology, and get inflation back to 2%. That's exactly what happened in 22 and 23. So that was a good outcome.
Jim, I'm just curious.
Got to be independence questions.
About the process. You made a comment about the Fed being independent and what you think that really means, and how you feel, for example, about this president, speaking out publicly against the Fed chair. There have been obviously instances, typically privately, where the president has said things about a Fed chair at one point or the other. This has been, I think, a different level. What do you think of that yourself?
I do think the president's entitled to his views. He's got long experience in real estate markets. It's all about borrowing money at the lowest rate possible. Good for him. He's got views, but a lot of people have views, and if you don't want to hear that, this is probably the wrong job. But I'm used to the debate, the international debate, really, that goes on 24 hours a day, 365 days a year, and so that it doesn't really faze me, or really most of the people on the committee, I think, to hear different viewpoints on where the policy should be. But we take our role very seriously, and we try to get the best outcome for the U.S.
Jim, you saw I don't know, we can't beat this to death, I guess, but we always like to try. But I'm not going to do that. I'm going to go to whether you think the latest employment numbers. We're still at 4.2. Is there cause for concern yet? And maybe inflation isn't what we should be worried about. Are the tariffs going to possibly cause a growth slowdown?
Yeah, I do think that is what's happening. We talked about it last time. The U.S. economy is only growing maybe a little north of 1% at a run rate. So what you're seeing is you lay on all these new taxes globally. That slows down the global economy. Of course, these firms in other countries have to think about whether they really want to sell into the U.S. or they want to move somewhere else or move their factory. Those are all costly things that will interrupt profits. So I think that's exactly what you're seeing is a slowdown in the global economy. I don't think that will be continue into next year. I think the pro-growth agenda will start to really take hold in 2026, and I think that'll be great. Let's have some less regulation, more of a pro-business policy stance for the U.S. We've got the AI boom going on. We've got a lot of good things happening, so I think we will grow faster going into next year. But, of course, you have this transition effect as we've changed our tariff policy to be more aggressive.